Hello and welcome to today's video, which is called Profiting on Non-Farm Payrolls. Hereby, I aim to prepare you for the actual figure, what I expect it to come like, and the aftermath across asset classes. So, what can we expect from the data? Let's start with this chart. Thank you again for liking so much the actual video where I had reaffirmed the short squeeze call made already some 36 or more hours ago to clients first about equities not having a permanent refuge, a higher ground on the tariff delay news and odds favoring their decline. And you can see how it unfolded and the profits that had been made on this move. Such was the intraday update sent to clients over 36 hours ago. So I'm linking to this presentation of yesterday. Thank you for liking this one and subscribing to the channel. Your likes help greatly in this video reaching more and greater audience. Such was the tweet at the early European morning, meaning approximately 26 hours ago. This presentation is being recorded around 2 hours before the US Open, so you will have plenty of time to digest the information and prepare yourselves for what's to come, and it will be huge. Expect great volatility because for a while tariffs are not going to be in the spotlight, at least for 6 or 7 hours. Yeah, they will come back. But today it's about non-farm payrolls and the gradually weakening job market that we will dive into. In yesterday's presentation, to which I am linking, I have covered gold and silver and crude oil calls made and how they had been unfolding to great trading signals clients benefit. So do review that presentation as well. And this is a current chart of yields where you see that ascent in yields had been rejected. And so let's now start the non-farm payrolls subject. They are comprised of government, private and manufacturing payrolls. Where do you see, considering Wednesday's ADP, which features just a small subset of the job market universe, and say challenger job cuts or continuing claims? I'm picking those that had ended on the bearish side, while initial claims had been behaved and coming in line fine, and we have to counter that picture with services PMI coming in still good, above expectations, and new orders being as well fine. But more data is coming in this chart, coming from Forex Factory, which is one of the two alongside trading economics that I use for data comparisons and macroeconomic predictions and assessment of the trend, and generally digging into the data to deliver you alpha. So, key three elements. Average hourly earnings. I do expect them to come in on the hotter side. Unemployment rate. It's a coin toss. It would not steal the spotlight, but it can come at 3.9 or 4.0 easily. But it would be a nothing burger, this one. But, as said before, it's going to be about still hot job market when it comes to earnings. Forget about the productivity that is undershooting. But you can see the steady underperformance descending trend in headline non-farm payrolls. And I do think that given those three components, given those, given where manufacturing is, very neutral now, and where private payrolls would be. Note that they had been expected to, last time they came in at 143,000, and now they are expected to come in at 160. So that's what I say in this chart. I mean, come on, this is going to be a disappointment, an undershoot. I have a pick when it comes to the actual figure where it's going to land us, and I'm sharing it with clients. This is the closing prices of S&P 500 together with the breadth perspective, hugging the 200-day moving average, the red line that everyone is watching, but there are more important signs, and that was the confirmed breakdown below the rising trend line connecting off starting with October 2023 bottom and rising from there, or approximately midpoint, and another one that broke down even earlier. So this is mirroring tariffs, consumer impact, profit impact, and heightened uncertainty, rotations out of high beta, and preference for domestic non-tariff exposed stocks and sectors. This is the sectoral view. You tell me, where is the leadership? Even in the washout, you see tech going down, real estate flushed, discretionaries and financials with communications. Have a look at Meta, have a look at Netflix. Where are the leaders? Industrials also going down. So, how close are we to a tradable bottom? Doesn't mean that we won't be having squeezes up and flushes down. That is a mainstay. This means that we have to be nimble, and you benefit even more so from connecting my daily analytics together with the intraday updates delivered over Telegram channels. My join page will help you select what's right for you based on what and how you trade. Good luck, be ready for the figure release, and great volatility on it.